Okay, so good morning everyone. So welcome to the research presentation of AMAT 199 students. So we start with the moderator for the first talk is Patricia Elaine Ebreo.
Hello and good morning to everyone again. Hello to those here in Zoom meetings and hello to those watching on Sir Mamplata's YouTube channel. So, the first to present her basis paper is Miss Abigail Alvarado. She is a BS Mathematics student, major in graph theory, and the title of her basis paper is the four color theorem and chromatic numbers of graphs. So, Miss Abigail, you may now share your screen.
Sir, naka-disable po yung share screen.
Okay na.
So good day, everyone. The presentation is entitled The Four-Color Theorem and the Chromatic Numbers of Graphs by Sarah E. Cates. So the study is closely related to mine because my special problem is on the four-colorability of non-planar graphs. But this one, she focuses on the applications of four-color theorem and also the different chromatic numbers of different graphs. So why is it of my interest? Well, the four-color theorem states that every planar graph can be colored by at most four colors in such a way that no two adjacent elements of the graph have the same color. It is interesting because it only says that it's for planar graphs. But how about the non-planar graphs? Obviously, they also have to have their coloring, but what could their chromatic number be? So before we get into the chromatic number of non-planar graphs, first we have to differentiate a planar from a non-planar graph. So to differentiate those two, the author used Euler's formula, which states that the total number of regions of a given graph is equal to its total number of edges minus its total number of vertices plus 2. Now, if the graph has greater than 3 vertices, then this the inequality holds for all planar graphs, which is the edges is less than or equal to the 3 times the vertices minus 6. Now, before we get into the research further, the author briefly discussed a few terminologies. So first, a graph consists of vertices and edges. So the graph on the right is called a wheel graph of 5 vertices because it looks like a wheel. Next, the edges connect the vertices, and the vertices are the nodes or points on a graph. So the edges are the black lines that connect the blue dots, and the dots, quote unquote, are the vertices. Edges subdivide a graph into different regions. So a region is the different portions of the graph. So here on the wheel graph of 5 vertices, we have 5 regions. So we have the 4 triangular regions, and then we also have the region outside the graph. So that's 5. That's a total of 5 regions. Next, we have the degree of a vertex is the number of edges connected to it. So for example, the central region has a total number of 4 edges connected to it. So it has a degree of 4. A path is a series of connected edges, and a path that starts and ends on the same vertex is called a cycle. And lastly, the chromatic number of a graph is the maximum number of colors needed to achieve a proper coloring. So what is a path? So for example, from the northern vertex, we will connect it to the central vertex. And then from the central vertex, we will connect it to the southern vertex. Then that is a path because the edges are connected. It looks like a pathway. Now, if we connect the southern vertex to the eastern vertex, then the eastern vertex to the northern vertex again, that is a cycle because it started and ended on the same vertex. So all wheel graphs have this cycle on the outside of a central vertex. And then for the chromatic number, so let's start coloring the graph. So since the northern vertex is already blue, then we should color the western vertex a different color, say red. And then the southern vertex can also be blue. So the eastern vertex should have a different color. So let's color it red. And now, since the central vertex is connected to all the other vertices on the graph, then it should be a different color, say yellow. Now, the first part of her paper discussed the four-color theorem, but since it is a given that the four-color theorem is only applicable to planar graphs, she focused more on the second part, which is the chromatic number of non-planar graphs. So how did she come up with this? What she did was she structured new graphs from wheel graphs. So how did she do it? So first, there are two kinds of wheel graphs. First, there are even wheels. So even wheels have an even outer cycle. So the wheel of 7 vertices has an even outer cycle. It has 6 vertices. All wheel graphs are planar. And this is the general structure of a wheel graph that she came up with. K plus 1 is equal to V and 2K is equal to E, where K is the chromatic number, V is the vertices, and E is equal to the number of edges. Now for even wheels, this is its general formula. Its vertices is equal to 2n plus 1. 2n because they have an even outer cycle, but since there's an additional central vertex, then it is 2n plus 1. And then it has even number of edges, so it's equal to 4n, and its chromatic number is less than or equal to 3. Now for the wheel graph of 7 vertices, n is equal to 3. Now what she did was she added n minus 2 edges to a vertex incident with an arbitrary vertex. Now the resulting graph is planar, and it also has the same chromatic number as the original graph. And you can do this up to n minus 2 edges. Now in the study, she mentioned that the resulting graph is non-planar, but I've been actually testing it. I also did the other way on how to check for planarity, and it really is a planar graph. So the error started here. So you can see here that she said that if you add, for example, 2n minus 2 edges, it would result to 6n minus 2, which is wrong because it should be 6n minus 4. So let's double check. So it says here that you have to add n minus 2 edges incident with an arbitrary vertex. So let's say, let's take this red vertex on the right, and then let's connect it to a blue vertex that it is not yet connected to. And since n is equal to 3, then it means that we will only add 1 edge. And we'll have this equation for the number of edges. So we'll have 4n plus n minus 2 is equal to 5n minus 2. To double check, we have n is equal to 3. 5 times 3 is 15 minus 2 is equal to 13. Excuse me. Next, if we add another one, so that means we added 2n minus 2 edges, and we'll have this equation naman. So we'll have 4n plus 2 times n minus 2, which is equal to 6n minus 4. Now, again, to double check, so we have 6 times 3 is equal to 18 minus 4 is 14. And yes, so far, tama naman yung edge count natin. And also to double check if it's planar or not, let's use this inequality since it has more than 3 vertices. So its total number of edges is 14, but 3 times 7 is 21 minus 6 is 15. So actually what happened here was if you use this formula, Euler's formula, sometimes it is applicable to planar or non-planar graphs. So what I did was I used Kuratowski's theorem, which she did not use. So that is looking for a non-planar graph within this graph. And actually, there is a non-planar graph with it, which is the bipartite graph of 6 vertices. So next we have the odd wheels. So this is the smallest wheel graph, the wheel of 4 vertices. Excuse me. But then, since all the vertices are connected to each other, then there's nothing more to use here or connect. So what we can do is we can use the next smallest odd wheel, which is the wheel of 6 vertices. Now it has an odd outer cycle, just like in the even wheel, and its structure is its total vertices is equal to 2n plus 2, which is, and its edges is equal to 4n plus 2. We considered an odd wheel of n greater than 1 vertices because the odd wheel, the smallest odd wheel rather, is already connected to all the other vertices. So wala ka na i-connect there, wala na structure pa. So we considered n is equal to 2 and it is 4 colorable. Now, similar to the one a while ago, she just connected edges to vertices that are not yet connected to. So the new graph also has the same chromatic number. It's also 4 colorable. So first, she added 2n minus 2 edges on the red vertex. Next is she added n minus 2 edges on the yellow vertex. And the third is she added n minus 1 edges on the blue vertex. So the new graph is non-planar. So for example, ayan, we added 2n minus 2 edges on the red vertex. Since n is equal to 2, then 2 times 2 is 4 minus 2 is equal to 2. So we'll have this edge equation, 4n plus 2 plus 2n minus 2 is equal to 6n. So to check, tama naman since 6 times 2 is equal to 12. So far we have 12 edges. Next is to add n minus 2 edges on the yellow. Now, since 2 minus 2 is equal to 0, so that means you don't have to add any more edge. And to check, you can actually add n minus 2 to the previous equation na 6n. And it will still yield 12 vertices. And lastly, we have to add n minus 1 edges on the blue vertices. So since n minus 1, so our n is equal to 2, so it means that we'll only connect one edge on the blue vertex. And we'll have this equation. So I used the 6n since the second equation also yielded 12 edges. So since it's just the same na 6n times 2 and yung 7n minus 2. So parehas lang naman sila. So I used the 6n here. So 6n plus n minus 1 is equal to 7n minus 1. Now to check, we should have a 13 edge count. And so far, yes, we have a total of 13 edges. And to check for planarity, we can also use this one. Here, it's surprising that here the Euler's formula worked, even without me checking using the other way of checking for the non-planar graph. So here, the total number of edges is 13, but then yung nasa other side ng inequality would yield 12, which is not true. So that means that this graph is non-planar. Now, here, only planar graphs have a maximum chromatic number as her study stated, but then the reconstruction of odd wheels yield 4 colorable non-planar graphs. I also forgot to mention that in the even wheels a while ago, there are some that works with the Euler's formula. So a while ago, the even wheel that I mentioned, nag-work naman yung Euler's formula, pero there are some that does not. Tapos, what I do is I have to check pa using the second theorem on planarity. So, ayun. So, yung sure talaga that would yield a four colorable non-planar graph is the reconstruction of odd wheels. And the odd wheels, the new odd wheels reconstructed, are still yet to be categorized. Now, these non-planar graphs' chromatic number vary due to several properties. Non-planar graphs kasi have different edge count, vertex count. They even have different categories that they belong to. Wala silang common category. So the next step for this research is to define additional types of graphs using the graphs rather that she has constructed. And that's all.
So thank you, Miss Abigail, for that presentation. So we are now open to entertain some questions about Miss Abby's presentation. And, okay, since still no one's asking about your presentation, I have one question for you, Miss Abby. Um, in what graph categories or families do the newly generated graphs belong to?
I actually looked up into those. Tapos, for example, dun sa wheel of 20%, 6 vertices, I think it's an integral graph. But I'm not really sure kasi di ko maayos yung vertices. And then, yung iba naman, ibang kind of graph din sila. So, yung mga na-construct niya, or depende sa construction, they all belong to different kinds of categories.
Thank you. So, are there any more questions from Zoom? Here's one question. What are some real-life applications of this particular study?
So graph coloring in general can be applied in programming. I actually saw that yung graph coloring can be used for predicting outcomes of a program. But I didn't really look into that kasi I'm not familiar with it. Pero yun, nakita ko lang na it's one application. Predicting outcomes of a program. Yung para sa flow and all that. Ayun.
Are there any more questions? Okay, since there are no more, there are no more. Okay, since there are no more questions, thank you, Miss Abby, for that presentation. And I shall. And who's the next presenter? Moderator.
It's me, Ellen.
Sorry. Okay, Miss Abby.
Okay, thank you, Elaine. So our next presenter is taking up BS Mathematics, and he's majoring in graph theory. The study that he will be presenting is entitled Square Harmonious Graphs. Please welcome Mr. John Patrick de Torres.
Good morning to everyone. This is my thesis paper for my special problem titled Square Harmonious Graph by N. Adeline Beatriz and P.B. Sarasida. So, for introduction, this paper was published in International Journal of Advanced Research in Science, Engineering and Technology in February 2016. So basically, this study is relatively new research about square harmonious labelings, corrected simple graph G of BE with n vertices and m edges. So later, we will introduce a new harmonious labeling called square harmonious labeling. And we will show that path graph, star graph, bi-star graph, and the cone graph P sub n, circle K sub 1 are square harmonious. So preliminaries, so we will define what is the graph. A graph G is an ordered pair of non-empty set V of G called vertex set of G and a set E of G called the edge set of G. E is an edge of G and U and V are vertices in V of G, then we write E is equal to UV. Here we say U and V are adjacent. Furthermore, E is said to join U and V or is incident to both U and V, or correspondingly, U and V are incident to E. So kung titingnan natin yung example dito sa right side, makikita natin itong example ng graph with 6 vertices and 5 edges. So makikita natin na yung 1 and 4 is incident to this vertex, and this vertex is incident to 1 and 4. So next, graph labeling. A graph G is said to be labeled if its n vertices are distinguished from one another by label such as B sub 1, B sub 2, B sub 3 up to B sub n. It is assumed that in most labelings that the set of natural numbers is the source of vertex labels. So graph labeling is parang nagli-label ka ng vertices or edge or both. So in this example, makikita natin na yung vertices has vertex labeling. So we will proceed to the paths considered by the authors, by the graphs considered by the authors. First graph is a path. A path P sub n is the graph that is an alternating sequence B sub 1, E sub 1, B sub 2, E sub 2 up to B sub n of vertices and edges that starts and ends with a vertex in such a way that the edges are obtained using E sub I is equal to B sub I plus 1, where I is equal to 1, 2, 3 up to n minus 1. So in this example, kita natin yung example ng P sub 8. So mapapansin natin na alternating yung vertices and edges. Second graph is the star graph. So what is a star graph? An n star graph is a tree of n nodes and one node having vertex degree n minus 1 and n minus 1 node having vertex degree of n of 1. It is isomorphic to complete bipartite graph K sub 1 n minus 1. So bali ito yung star graph, kikita naman natin yung number ng vertices is the n star. Makikita natin the central vertex has n minus 1 vertex degree, and the other n minus 1 vertices have vertex degree of 1. So kung i-convert natin ito sa complete bipartite graph, o 6 star is K15. So bali you can partition this graph into two sets. In the first set, in central vertex, and the second set in the other vertex. So in this example, we have 6 star, 7 star, and 8 star. So the third graph is the bistar graph. A bistar BPQ is the graph obtained by joining the center vertices of two copies of n star graph by an edge. So basically, ang sinasabi lang dito, you have two star graphs, and there is an edge that connects the central vertices of that two graphs. So nakikita niyo dito sa example. The next graph is the cone graph. A cone graph or a cone V sub n circle K sub 1 is a graph obtained by connecting each vertex of the path V sub n to a corresponding singleton or isolated vertex K sub 1. Thus, a cone will have 2n vertices and 2n minus 1 edges. So yun, ito makikita natin dito sa example, there is a path, this yung B sub 1 up to B sub 8, and yung meron siyang pendant vertices, yung B sub 9 up to B sub 16. So yun, kung graph siya, mukha siyang comb or yung supply. Next is harmonious labeling. A graph G with n vertices and m edges is said to be a harmonious graph if there exists an injection F from vertex set of G to 1 to up to m such that the induced mapping f star is equal to E of g to 1 to up to m defined by f star uv is equal to f of u plus f of v modulo m plus 1 is a bijection. So, so in this example, makikita natin na yung vertices and yung edges distinct sila. So iba-iba sila and under sila and sila part sila nung set ng ating vertex set and edge set. So kailangan pinasabi lang dito sa harmonious labeling, kailangan distinct yung ating labelings. So this is the main part of the study. Since this authors was actually the one who formulated it. Definition: a graph G with n vertices and m edges is said to be square harmonious graph if there exists an injection for f from vertex set of G to 1 to up to m squared plus 1 such that the induced mapping f star is equal to edge set of G up to 1, 4, 9, up to m squared. Kung mapapansin ito yung mga square. 1 squared, 2 squared, 3 squared, up to m squared, defined by f star uv is equal to f of u plus f of v modulo m squared plus 1 is a bijection. So yun, parang basically katulad lang talaga actually siya ng harmonious labeling. Ang pinagkaiba lang na yung vertex set natin ay aabot siya ng hanggang m squared plus 1, tapos yung edge set natin ay yung mga perfect square numbers. So for our first theorem, every path P sub n is a square harmonious graph. So in the proof, let P sub n be a path with n vertices and m equals n minus 1 edges. So yun, let B, vertex set ng P sub n is equal to, yun yan, nasabi natin kanina, alternating sequence, and edge set of P sub n equals V sub I to I sub I plus 1. Define an injection f from vertex set ng P sub n to 1, 2, 3 up to m squared plus 1 by, so yun, itong mga values na to, itong mga f of V sub 1 up to V sub n natin ay pinormulate ng ating authors. So, hindi ko na isa-isahin. So f induced as a bijection f from from equal to 1, 4, 9 up to n minus 1 squared. Where f star uv is equal to fu plus fb modulo m squared plus 1. The edge labels are distinct, hence every path P sub n greater than 3 is a square harmonious graph. So yun, para ma-visualize natin to visualize this theorem. So here's sample. So square harmonious labeling of path P8. So as you can see, in edge labels natin is perfect square numbers. So in this vertex labeling, yun yung nakuha natin kanina kapag kinumpute natin yun from this, yung B sub I, B sub 2, B sub 3, up to B sub n. So the next theorem is star graph K sub 1n is a square harmonious graph for all n greater than or equal to 2. So yun, same lang din, pero ang iba syempre yung algorithm niya. Hindi ko na masyadong i-discuss to. Pero kung to visualize this, so yeah, ito ang sample. Example 2 ng 5-star graph. So central vertex 7, 22, 9, and 18. As you can see, the edge labels are perfect squares. Next is bi-star graph, square harmonious labeling din. To visualize, ito yung sample of B55. Lastly, the comb graph, P sub n circle K1 is square harmonious graph for n is greater than or equal to 2. Actually, yung pinaka-importante dito is malaman yung number ng edges. So yung ilalagay mo dito sa, yun yung pinakadulong ano natin, vertex. Sample ng square harmonious labeling of comb V8 circle K sub 1. Yun. Nakikita natin perfect square yung mga edge labels. So yun, reference ng Beatrice and Sarasidio, Square Harmonious Graph, International Journal of Advanced Research in Science and Engineering Technology. So yun. Thank you.
Thank you for the presentation. Now the floor is open for any questions. So since I'm also a graph theory major, I have a question. Is the algorithm used by the author in graph labeling unique?
Actually not. You can actually find other algorithm. For example, my advisor, Mr. Bernal Lawas, actually have an alternate algorithm for the square harmonious labeling of paths and comb graph. So yun. So hindi unique yung mga labelings ng graphs.
And then, are there other types of harmonious labelings or other examples of graphs that are square harmonious?
So yun. For examples of other types of harmonious labelings, meron actually graceful harmonious, super total harmonious labeling, odd and even harmonious labeling, prime harmonious labeling, yung cubic harmonious labeling. Yun. Actually marami pa. Pero yung study nga ng square harmonious, nagsimula lang siya noong 2016. Another type ng square harmonious graphs is yung corona graph. Not sure if, pero meron pang mga ibang graph na sinasabing harmonious. Hindi ko lang sure kung square harmonious siya, like corona graph, yung caterpillars, firecracker graph, friendship graph, jellyfish graph, ayun, and so on.
And then lastly, I didn't really catch on what your specific special problem is, but what is the relationship of the study to your special problem?
Actually, it's not important actually kasi since my research is about square harmonious labeling of banana trees. So bale, other example siya ng square harmonious labeling. So I was able to make an algorithm to show that banana trees are square harmonious. So yun, and later on, hopefully I can also show that it is cubic harmonious.
Thank you. Are there other questions? I guess there are none. I think I asked all the questions. So thank
So yun. So our next presenter is Mr. Alfonso Luigi Miguel Salyan, a BS Applied Mathematics student specializing in financial mathematics and actuarial science with his thesis paper entitled Optimal Portfolio Allocation Among Rates, Stocks, and Long-Term Bonds, an Empirical Analysis of U.S. Financial Markets. So yun, you can start now.
Kuya, can I be heard first? Kasi my mic sometimes it's unreliable. Can I be heard?
Yes.
Thank you. So let's proceed with the research to be discussed. So one of the basis papers for my special problem is entitled Optimal Portfolio Allocation Among REITs, Stocks, and Long-Term Bonds, an empirical analysis of US financial markets. So this study was conducted in 2014 by Doctors Rafael Buyan, James Kule, and Charles Shemeki. The first and the last are from the American University of Kuwait, and Dr. Kule is from California State University, San Francisco. If my memory serves me right. So an overview of their paper would be their introduction, the reasons for doing this study, their literature review, their data collection and initial analysis of their data, their methodology, which they proceed from the work of Doctors Agrawal and Waddle from 2006, their results and discussion, and finally their conclusions. So we first begin with mean variance analysis. It's a tool used by fund managers and investors to optimize portfolios of diverse assets. Their goal is to create a portfolio that improves return while reducing risk. So, for a given level of risk, say you could maximize your return, or for a given level of return, you would want to minimize your risk. And this can be done by considering different types of assets, the most common of which are stocks and bonds. And there are other strategies you could employ, such as employing different types of asset classes, or within an asset class, such as stocks, you could include different types of stocks and different combinations. Popular alternative investment included in these portfolios are the real estate investment trusts, or REITs, which are essentially equities on the real estate portfolio of a company. So the reasons why they wanted to include the REIT are the following. So REITs will have assured dividends at high rates because in the States, REITs also have special tax exemptions. So your dividends are tax exempt at a certain level. Prices are then pegged on stable real estate. So this makes REITs good hedges against inflation or deflation. When in the times when financial markets are volatile, the real estate market is not expected to behave in the same way and could even appreciate or maintain its value. Then in the States, REITs generally outperformed every major US stock market index. And this was since REITs were introduced way back in the 1960s until the present. Then REITs are supposed to have less risk. So they concluded, or they researched, that they were 50% less risky. And they're supposed to have low correlation with stocks, bonds, and other assets, which would make them good portfolio diversifiers. So the problem statement is that using mean variance utility function analysis with varying degrees of risk aversion, this research examines the impact of including real estate investment trusts in the formation of optimal portfolios. It also examines and develops a sensitivity analysis for risk REIT premiums and their effect in determining an optimal portfolio mix by applying mean variance analysis. So let's break down our statement. So first, the main goal of the problem would really be to determine the optimal allocation of REITs in a mixed asset portfolio. This is proceeding from the formulas in mean variance utility function analysis that were already derived by Doctors Agrawal and Waddle in 2006. Aside from the formulas for the optimal REIT weight, Doctors Agrawal and Waddle were also able to derive formulas for the effect of varying REIT yields on the optimal REIT weight and the effect of stock and REIT correlations on the optimal REIT weight. And Doctors Buyan et al. Wanted to test out these extra formulas, which you can see are shown by their second and third objectives. So for their literature review, they conducted a survey of different studies which used correlation analysis and mean variance analysis, which recommended varying portfolio weights for REITs, some from 5%, some to the very high two-thirds of the portfolio size. Then studies really showed positive results for REITs or positive characteristics. So REITs diversified portfolios. That means they have low correlations with other assets. They reduce risk. So they have low standard deviations, volatilities, or variances. They have increased returns, as explained a while ago, and they are hedges against inflation, again, because they are pegged with real estate prices. Surprisingly, though, even if a lot of studies attribute good qualities to the REITs, studies on the portfolios of institutional investors like pension funds determine that the REIT allocations in those portfolios were below the theoretically optimal and recommended weights. Then comes in the other side of the spectrum, because we also have studies where REIT returns were projected to be poor compared to other assets, and they have unstable correlation. So it's hard to determine things like diversification potential. Then it turns out many of these studies discovered that REIT performance varied with time. That is, if you have a large market correction, say a financial crisis, REIT performance is expected to be different post and pre financial crisis. So we now move on to our data and to their data and exploratory analysis. They collected monthly equity returns of REITs, their monthly S&P 500 returns to symbolize their stock market benchmark, and 10-year treasury notes from 1997 to 2007, which would serve as their market benchmark for the risk-free asset. So in total, they have 11 years of data. So from these data sets, you could already do initial exploratory analysis or determine some statistics. So for this sample period, REITs offered higher returns than stocks and bonds. So as we can see here, the returns on REITs were clearly the highest among the three assets. So the first claim to fame of REITs of having high yields is true in this case or for this data set. As we move on to the other statistics, we have seen that REITs have the highest standard deviation among the assets. Here, it can be seen that they have the highest standard deviation. Now, that kind of rejects the second claim to fame of REITs, that they're supposed to be less risky than other assets. And then REITs have higher correlations with stocks than with bonds, which could signify decent diversification potential. But we note that this correlation increased over time. So the decision to choose which asset to include in your portfolio then is not as simple as looking at which has the highest average return and which has the lowest standard deviation. That's where mean variance analysis comes into play. However, the decision also isn't as easy when you increase your risk appetite and the level of return also increases. You need to account for things such as your risk appetite in determining the optimal weights of your assets in your portfolio. So first, we assume that investors can choose portfolio weights that maximize the utility function for different levels of risk aversion A. So we have a utility function which essentially describes your level of satisfaction with your assets, with your portfolio. Um, Maximizing your utility function means that for a given level of risk, you are getting the best satisfaction, not necessarily the best reward, but you are receiving the best satisfaction for that particular portfolio. Now we have different levels of risk aversion A, which range from 1 to 10. Levels closer to 1 would mean that you have a high appetite for risk, and levels closer to 10 means you have a lower appetite for risk. Then we next have our equation for our three asset portfolio. From the three asset portfolio equation, we can set the partial derivative of our utility function with respect to the portfolio weights equal to 0 to maximize utility. Again, we would want to maximize your satisfaction for a given portfolio. If we look at our utility function here, we will find the variable RP, which is actually our three asset portfolio equation. And we can see that our utility function is a function of this equation, of our portfolio equation. Then it makes sense taking the partial derivative of u with respect to the desired asset weight that you want to maximize equal to zero, that you would be able to determine your formula for your optimal asset weight. So from Dr. Agrawal and Waggle's 26 model, this is essentially the formula they derived by setting the partial derivative of the utility function with respect to the REIT weight equal to zero. So they were able to generate this equation, which will give you the optimal REIT weight. Similarly, you could start with other assets such as the bond, and you will have this equation by applying the same procedure. Then once you have your optimal asset formula for the bond, you you would be able to derive this equation for the optimal asset allocation of the REIT. Then after that, if you also need to determine your allocation for the stocks, and it will follow from the preceding three asset portfolio formula here that it would be one minus the weights of the other assets. So finally, we go to the two additional formulas that doctors Agrawal and Waggle were able to derive. So the first equation measures the effect of changes in REIT returns on their optimal weight. This second equation measures the effect of REIT stock correlation on the optimal REIT weight. Uh, these equations may really look daunting at first and quite complicated, but you will realize that the parameters in these equations are sigmas, correlations, and even the a's, the x, y's. They're just functions of your sigmas, correlations, covariances. And these are things that you would have already computed for in your exploratory analysis conducted earlier. Let me just get back to that exploratory. Add additional tests such as the Sharpe ratio or the n-squared measure to determine the risk-adjusted performance of REITs. So there are a lot more things that you could add to describe your asset to this matrix. Then these will also not go to waste because they will later on be used in these formulas in obtaining the optimal weights. So finally, this is what their results look like. And I'll just give you a brief summary so it wouldn't be too overwhelming. So essentially, they had two versions of this experiment, one with stock bond risk premium of 6% and the other at 1.2% because there is a market correction such as a financial crash in the middle of their data. But let's just focus on this table since the results of the second table are just similar. So at our stock bond risk premium of 0.06%, the stock bond REITs perform better than bonds and stocks. If we could see here that the optimal allocation for REITs were always higher than stocks and bonds. At 1.5% REIT stock risk premium and risk aversion less than 7, investors are advised to allot majority of their capital wealth to REITs, short sell bonds, and put little money on stocks. The effect of REIT returns is dependent on risk aversion and decreases when risk aversion is increased. So this pertains to your formula on the varying REIT returns. So as risk aversion increases, or as you are less inclined to assume more risk, your optimal allocation of REIT weights also decreases. A similar observation also occurs for the last formula regarding the REIT and stock correlations, but it's not as prominent. Therefore, they concluded that REIT returns were better measures of marginal changes in optimal REIT weight than correlations with stocks. Then finally, similar patterns are observed for 2 and 2.5% REIT stock risk premiums, and REIT stock correlations increase as risk aversion decreases. So at 1.2%, this is the second part which accommodated for the market correction. Investment in REITs increased at the stock bond risk premium increases. Next, correlation decreases and risk aversion level increases. So these results are essentially the same with the previous one and are just generalizations. When risk aversion is increased, the weight and rate decreases, while the weights and bonds increases. Then finally, since correlation between REITs and bonds is low, we can reduce risk from REITs by increasing exposure to bonds instead. So let me just take you back to this table. I'm not sure if it's clear. But level 1 would be your riskiest level, level 10 would be your least risky level. We can see that as you decrease your appetite for risk, going from 1 to 10, the optimal portfolio allocation of REITs decreases. This is also the same for stocks. However, when you turn to bonds, your optimal allocation for bonds increases as your appetite for risk decreases. We can also see that at this point, there's always a higher allocation of REITs in the portfolio than the theoretical recommended allocation for stocks. Then for our then for the effect of REIT returns on their optimal weights, we could also see that it decreases as your risk aversion increases. Then, like what was said a while ago, the effects of the stock and REIT correlations really had marginal effects. As you can see, they're all around the neighborhood of 0.05, although the trend here is really decreasing, but not as pronounced as the effects of varying REIT returns. So finally, let's go to our conclusion. So a stock bond REIT premium of 0.06%, investors are better off spending majority of their capital on REITs for risk aversion levels 1 to 6 and 1 to 9 for 1.5 and 2% risk premiums respectively. At REIT stock risk premium of 2.5%, risk aversion is negligible and investors can short sell bonds to invest more in REITs. The changes in REIT weight affect the optimal REIT weight. Uh, Rather, this should be the changes in REIT return affect the optimal REIT weight, which decreases as risk aversion increases. The REIT stock correlation does not considerably change the REIT's weight, indicating varying returns again are more important to consider. And finally, investors with high risk tolerance also tend to mix more stocks and REITs with higher correlations. Yet the higher returns of REITs indicate a higher portion allotted to this asset. So thank you. That is the end of this discussion.
So yeah, thank you for that presentation, Mr. Luigi. Floor is now open for questions. So there is a question here from Marco Alcantara. Uh, you presented a study on US stocks. Could those methods also be applied here in the PH given the difference in performance of the stock market? Can you identify some pros and cons if it would be applied?
Thank you, Marco, for your question. That's actually what I'm doing with my special problem right now. I am using the formula that was originally used in the States, and then I'm using it in the Philippine setting. So the difference would be, for example, your risk-free rate would be in terms of Philippine treasury bills instead, or I would be using the PSEI instead of the S&P 500. Um, the differences would not really matter. The formulas will not break down. It's just that in the States, there is really this already established idea that REITs perform better than stocks. However, since in the Philippines, REITs are new, there is no guarantee that our results will be parallel in that REITs will also have higher allocation in the portfolios, for example, or REITs will always have higher returns. So the behavior of REITs here in the Philippines is yet to be seen, which will be done in my special problem. Excuse me for the airplane. Um, and again, the optimal allocation of REITs here in the Philippines may not necessarily follow the rankings generated in the US REIT studies. Some pros and cons. Again, for example, you're using certain ratios. There might be a chance, especially since the stock market is down right now, that your risk premiums could be negative. They were using positive risk premiums for our paper. However, the risk premiums, of course, will be incorporated in the calculation. But since we would be ranking the performance of the REITs, even if they are negative, you would still be able to tell which perform better, or although of course the weights will not be negative. But even with that, even with those constraints, you would still be able to say which asset would have more weight in your portfolio. So that would be one disadvantage, but it's something that you could work with and you could still obtain a ranking analysis of your results.
So is there any other question? So, ayun, tanong ako, how does utility theorem factor in risk aversion?
Okay. So utility theory, as I mentioned a while ago, would incorporate, it would essentially be your level of satisfaction for a given level of risk and a given return for that risk. So you would want to maximize your utility. What utility theory does is it incorporates the idea of indifference curves, which essentially model your satisfaction level. Now, from utility theory, it will have assumptions such as you would want graphs or indifference curves that are higher than the previous curves. That would essentially signify more satisfaction. What you would want to do, since your mean variance analysis would generate a graph as well, it would be the graph of your portfolios exhibiting returns for different level of risks. That is your minimum variance frontier. You would want to intersect your minimum variance frontier with the highest possible utility function. That is why we are maximizing the utility function. So the intersection between the highest possible or maximized utility function and that graph you generated from mean variance analysis would essentially give, or that point, the intersection would essentially give your optimized utility for a given level of risk and a given portfolio and a given weight of the asset for that portfolio.
Thank you. So we will proceed now to the next moderator.
Thank you, Kuya JP. So I'm the next moderator, and I will be presenting to you Mr. Jomel Agnote, who's also from the Financial Mathematics and Actuarial Science cluster. He will be presenting his talk called Empirical Analysis of Optimal Stock Portfolio under the COVID-19 background. So without further ado, let's bring you to Jomel.
Thank you, Luigi, for that introduction. Um, okay. So this is my basis paper for my special project. So empirical analysis of optimal stock portfolio under the background of COVID-19. So by Yifan Li, Yulu, Yukianzu. Um, so in our market today, there are several investments that are focused on customers. So one of those type of investment is stock. So understanding how much profit and risk is relatively small, but relatively simple, but finding finding the most suitable investment strategy or portfolio is quite trickier than it seems. So this paper aims to build a model that creates a portfolio with the highest utility under the background of COVID-19. So as we all know that COVID-19 first struck China and then spreads rapidly around the world and has already influenced more than 100 countries. And more than millions were infected by the virus all over the world. So it does not just affect the health security of every country, but it also affected their economies. In the financial markets, the biggest shock is in US stock. The pandemic also has affected the value and the prices of of other important products and companies. So the researchers are trying to incorporate the behavior of the investor with their investment strategy. So this paper is influenced by the idea of prospect theory by Kahneman and Tversky. So, and it is also influenced by the regret avoidance proposed by Bell, Blooms, and Surgeon. Um, and then by those ideas and theories, we will maximize the asset utility with an expected yield of return. Um, Data and selection. So the researchers chose the data from January to from January 2 to April 17, a total of 108 days. Mainly considering that the time of the pandemic is less than half a year last year. So they choose 10 highest profit margins from the construction sector as their research object. So these are the 10 stocks that are in their paper. Okay. They choose or they select the closing prices of each stock and computes the yield and standard deviation of each stock. And the researchers choose the infrastructure sector for two reasons. The first one is the delayed of all professions and impact of the global pandemic in that sector is exceeded 10%. So um, So ang ginawa ng Chinese government nun is nag-launch ng series of policies to boost and promote the sector, thus increasing or boosting din yung valuation ng ating sector na yun. So therefore, napakaganda niyang investment ngayon or investment opportunity. And then the other reason is the shift in investor risk appetite. So consider din natin dito yung risk-free interest rate as an investment. So proceed tayo sa calculation ng stock return rate at saka standard deviation. To compute for the stock return, nung return from January 2 to April 17 for the so we have R sub I is equal to PI sub T minus P sub IO divided by P sub IO. P sub IT is the closing price at the last date, which is April 17, and then P sub I sub O is the closing price at January 2, 2020. So to compute for the standard deviation of stock prices during the epidemic period, so we have this formula where sigma I is the standard deviation of the stock price and PI sub J is the closing price of the I stock on DJ. So to establish the best investment portfolio for these stocks, they use utility function of regret avoidance using the help of prospect theory and a concept of regret avoidance. So pag-proceed tayo sa establishment ng model, okay? So, given R sub I, which is the return rate of I stock, and R sub F, which is the return of the risk-free assets in the market, and sigma I, which is the standard deviation, maka-compute natin yung W natin. W is the total amount na ma-own ng ating investor after some time. So this is W sub O is the initial amount na i-invest ng ating investor. Multiplied by 1 plus R sub F, which is ito yung ma-earn niya for the risk-free investment. Plus W sub O, and then this one is yung ma-earn niya naman from the stocks. Okay? So based on the prospect theory proposed by Kahneman and Tversky and the concept of regret avoidance, so we finally get the okay, this is just the same with this. So, and the expected subjective wealth na, yun yung expect natin na wealth niya after this is this one, this formula. So ano bang trabaho nito? So ang mangyayari dito, magagamit natin itong W natin, tsaka expected ng W to get the maximum value ng ating utility function, which is yung goal natin. Okay? So, ayan. So, this paper sets 3 restricted conditions for the utility function. Una is that yung ating different investors have a different expected rate of return, alpha, of portfolios. Next one is yung investors natin will consider risk in this investment. The broadest acceptance of its portfolio risk is sigma max. And then the sum of the risk-free investment and the proportion of each stock investment will be 1. Okay. Okay. So as a result, kung makikita natin dito, using the parameters, the expected return natin, which is 5%, and then the parameter theta, which is equal to 2, ginamit natin yung Kuku algorithm to solve for the optimal stock portfolio or yung ratios ng ating mga stocks or yung i-allocate natin sa stocks na yun. Okay? So under the influence of COVID-19, investors tend to be more cautious, will be less affected by emotion. So this paper takes a smaller regret degree parameter, which is 0.5. And the most significant risk for investors is 0.1. So as a result, makikita natin dito sa table na to, yung mga investment ratios natin for the specific companies natin. So kung mapapansin nyo, mas pinakamalaking i-allocate natin is dun sa risk-free investment natin. And then, pumangalawa is yung sa Hangzhou Steel, and sa Ningbo Construction Corporated Limited. So we can see from the table 1 that the yield equal to the 5% and the lower risk tolerance will have the risk-free investments as the largest portion natin. Okay, so let's proceed to the conclusion. So as a result, clearly, kung makikita nga natin, ito yung tatlong may pinakamalaking distribution from the table, which is this, Hangzhou Risk-Free Investment, Hangzhou and Steel Structure Corporated Limited, and Ningbo Construction. So according to their assumption, bakit pinakamalaki yung sa risk-free investment? Kasi they assume at that 6-month time deposit return rate, it is not related to the 10 stocks. So far, would like to restrict the risk of their investment. It is a safe choice despite its low return rate. Safe siya, although mababa yung return rate niya. So the other 2 stocks, mataas yung kanilang profit, but competitive pa rin naman sila in terms of the risk. So, ayun.
Hi, Jomel. Thank you for that. Do we have any questions? Please post them down here in the chat. I have some questions. First, obviously, our studies are a bit similar. So I'd like to ask, what's the main difference between this model? Is this model new with traditional modern portfolio theory? And given that, what new results could it bring? Because it's already standard that, of course, bonds will be safer than stocks. So what new developments could we expect that this model would highlight?
So for the first question, ano yung pagkakaiba ng Markowitz sa yung modern portfolio theory dito sa model na to is that sa Markowitz, ang minimize natin yung risk. Okay? So dito naman sa model na to, ang minamaximize natin utility natin, yung satisfaction ng ating investor. So medyo malaking pagkakaiba yon. And then for the second question mo naman, can you repeat that? Yung second question? You're muted.
Sorry. So I was looking at the results and then, for example, mas malaki yung portion for, is that correct? Mas malaki po yung portion for bonds
Yeah.
for the risk-free
For the
assets.
risk-free assets.
So given that it is already knowledge, for example, that our risk-free asset would be safer than our risky asset. So our portfolios would have a certain amount of risk-free asset. What are the highlights that this type of model can bring? So will it be able to highlight which stocks are better than the others, or or in the Philippine setting would it be different? What new developments would we be able to see from this model?
Since satisfaction or utility function yung sinusukat niya or minimeasure niya, I think mas maganda siya dahil paano ko ba explain? How can I say that? Wait. Kasi mas risky, syempre pag mas risky, mas mataas yung rate. Mas mataas yung nagiging yield natin, tama? Yung return rate natin. So, dahil nga satisfaction yung sinusukat niya, mas nagpo-focus tayo doon sa gain nung mas nagpo-focus doon sa gain sa return rate natin. So, ayun yung pagkakaintindi ko doon sa
Okay. So instead na minimeasure mo talaga kung alin yung mas maraming return, the model is able to, ayun, again, satisfaction. So it could be able to compare satisfaction levels between the assets.
Yes.
Oh, sorry. I have one last question because it's so interesting.
That's fine.
So given right, our stock market here is crashing, but it appears to be that the Chinese stock market, which was the basis of this paper, a lot of their stocks are overvalued. So that's going against what's normally happening with stock markets during this pandemic. So how do you think will this affect when you transfer this model to the Philippine setting? So do you think maybe you would need different transformations for your data, or you would need to adjust it to account for the fact that the markets are moving differently in the two countries?
So as I said earlier, yung na-mention din sa paper na kaya tumaas or naging sabi ko overvalued yung stocks sa specifically the construction sector is that naglabas ng mga policies yung China kung saan mas nag-focus sila dun sa construction sector. So nag-boost yung values niya, and syempre kasabay nun mas magiging magandang investment opportunity siya. So ang tanong mo is kung paano ko siya apply dito. So ayan yung ayan yung ginagawa namin ngayon sa SP namin. So ang goal namin is hindi yung overvalued yung aming kukunin. Ang kinukuha namin is yung mga umuusbong lang na stocks, pero they are considered maganda yung nagiging return nila, but they are not considered blue chips, kumbaga. Blue chips are those stocks na medyo mahal yung ayun. So pero kung yung sa ibang study naman, pwedeng magkaroon na mangyari yung sinasabi mo na transformations or ayun.
Sorry, that's really just it, Jomel. Thank you, and a really good luck to your study, because this might be a new way for us to do everyday analysis on our stocks, especially given the pandemic. So I'd like to turn it over to you to be our next moderator.
Okay. So our next presenter is Abraham Delamar. which is BS Applied Mathematics student, major in QMDS. So his basis paper is addressing the social economic impact of the COVID-19 pandemic. So, Mr. Delamar, you can proceed now to your presentation.
Thank you so much for the introduction. So for my presentation, it's the addressing the social and economic impact of the COVID-19 pandemic. This is presented by NEDA, or the National Economic and Development Authority. Dito makikita natin ang na-forecast na values ng NEDA at yung mga plano na gagawin ng gobyerno para maiwasan ang mabilis na pagkalat ng virus at ang mabilis na pagbagsak ng ekonomiya. So according to World Health Organization, the first case of COVID-19 was reported from Wuhan, China on December 31, 2019. And the first case is in the Philippines was identified on January 30, 2020. The World Health Organization declared the COVID-19 outbreak a pandemic on March 11, 2020. And as of March 19, 2020, globally confirmed cases reached approximately 219,000 and almost 9,000 deaths. In the Philippines, that time there are 217 total confirmed cases, 17 deaths, and 8 recoveries. Now I will be discussing the impact of the pandemic to different economic sectors. The average GDP forecasts are around 0.9% for 2020. So maganda ba itong 0.9% na ito? Ang sagot ay hindi. Because according to economists, the ideal GDP growth rate is between 2% to 3%. Growth needs to be at 3% to maintain a natural rate of unemployment. Next, to discuss the impact of the pandemic to travel and tourism. Korean and Chinese tourists comprise the largest number of foreign tourists in the Philippines. That is why with the Philippine government travel ban to and from China and Korea, the tourism sector is significantly affected. NEDA forecast a loss of GVA of 77.5 to 156.9 billion pesos, which is equivalent to 0.4% to 0.8% of GDP in 2020. The slowdown in economic activities may reduce employment by about 33,800 to 56,600. Next is the impact on consumption. According to NEDA, there is a 5% to 10% decline in household consumption of non-essential commodities. That includes alcoholic beverages and tobacco, clothing and footwear, furnishings, etc. This results in a loss of GVA of 45 to 94 billion pesos, which is equivalent to 0.2% to 0.5% decline in GDP, and reduce employment by 16,500 to 62,500. Impact of Luzon-wide ECQ. In 2018, Luzon accounted for 73% of the country's real GDP. It is significantly larger than 13% share of Visayas or 15% share of Mindanao. NEDA estimates that the ECQ over Luzon for a month could result in a loss of GVA of 298 billion pesos to 1.1 trillion pesos. It is equivalent to 1.5% to 5.3% of GDP and reduce employment by about 61,000 to 1 million. So in the summary of the pandemic's economic impact, sinabi rito na base sa sabay-sabay na masamang epekto sa supply and demand of economy, we expect a cumulative loss of 428.7 billion to 1.355 trillion pesos in GVA, which is equivalent to 2.1% to 6.6% of nominal GDP in 2020. This would imply a reduction in Philippines' real GDP growth to negative 0.6% to negative 4.3% 2020. Okay? Now I will be discussing kung ano nga ba yung naging plano ng NEDA upang masolusyonan ang masamang impact ng pandemic sa economy. So NEDA proposed a three-phase program of interventions. Phase 1A, clinical or medical response. Phase 1B, public health response. Phase 1C, short-term augmentation of health systems capacity. Then phase 2, which is to rebuild consumer and business confidence. Last is phase 3, resume a new normal state of economic activity that is more prepared for the next pandemic. So each phase is divided into 4 columns: interventions, objectives, other problems and issues, and intervention design considerations. Phase 1A, clinical or medical response. The first intervention is the early detection and diagnosis. The objectives are to provide care at early stages and to isolate person under monitoring and person under investigation from the non-infected population. The basic difference between the two is that PUI require hospital admission, whereas PUM only need to self-quarantine for 14 days. The main problem with this intervention is the cost of testing kits and adequate number of trained personnel. The intervention should consider the following: adequate number of testing kits, thermal scanners, personnel, funding, and proper distribution of resources or facilities across the country. The next two interventions are effective quarantine systems and effective management and treatment protocol. Lastly, research and epidemiological studies. The objectives of this intervention are to contribute to the body of knowledge on COVID-19 and to improve health surveillance and health systems planning. So, phase 1B, public health response. The intervention under this phase will require cooperation from the public. So the first intervention, travel ban. Ang problema dito is magde-decline yung revenues and travel and tourism sectors. Pero that is okay kaysa kumalat agad yung unknown virus. Next is to promote proper hygiene and strong immune system. The objective is to reduce the reproductive rate of the virus. Massive information campaign and dapat ma-inform rin pati yung mga di abot ng media. And the next three intervention are ban on crowded gatherings, school closures, work suspension. These three have the same objectives, which is to reduce the average number of persons that a positive case can affect. And just to let you know, the amelioration fund of the Department of Labor and Employment is worth around 1.5 billion pesos, which can cover about 300,000 workers. So phase 1C, short-term augmentation of health systems capacity. Dito sa phase 3, what we need is support of government. The health system should be better equipped to handle the potential surge. So the first intervention under this phase is increased supply of personnel protective equipment or yung tinatawag na PPE. The objectives are to protect frontliners against infection and to prevent the spread of the virus. Next is increased number of remote quarantine facilities or RQF, including modular isolation rooms. The problem is that residents in the area where RQF will be set up may be endangered. Last intervention we have is increasing the supply of needed hospital equipment and paraphernalia, like gloves, masks, PPEs, oxygen tanks, etc. So phase 2, rebuild consumer and business confidence. Once the ECQ is lifted, there might still be reduced economic activity as the public becomes hesitant to engage. The best way to address this problem is to assure the public of adequacy of our improved health systems. And here are the interventions for the second phase. First is to assure public of adequacy of health systems. The objectives are to expand health systems capacity and to communicate this to the public. The intervention design considerations are to increase human resource for health and improve health surveillance systems. Next is implement staggered working and business hours. The objective is to continue practice of social distancing even after the ECQ. Last is the phase 3, which is to resume a new normal state of economic activity that is more prepared for the next pandemic. These include the following: redefine the new normal state of economic activity, They calibrate development plans and work programs to conform the new normal and implement the new normal. NEDA should begin preparations for phase 3 by conducting various scenario and foresight planning exercises. This should involve multiple stakeholders. The more important phase is communicating this to the public and building a constituency for the new policies and paths. This three-phase program of interventions of NEDA that was proposed March last year is great, but I believe that we are still on phase 1. So these are the references. Thank you for listening.
Thank you, Abraham, for that informative presentation. So let's have our questions now. So we have a question from Sir Marco of Alcantara. So, to Mr. Delamar, ano-ano mga foresight methods yung tingin mo appropriate for phase 2?
Foresight methods. Foresight methods. If I'm not mistaken, may qualitative and quantitative yung foresight methods. So in the qualitative forecast methods, sa tingin ko ay appropriate para sa phase 3 yung surveys at SWOT analysis. Survey to know if we are truly ready for the new normal. So a questionnaire should be distributed and available online. And SWOT analysis, they should identify the resources and capabilities to prepare for the new normal and clarifies them in terms of strengths and weaknesses. And for the quantitative forecast method, I think appropriate. Okay. For the quantitative forecast method, syempre modeling yun. Thank you.
May isa pa tayong question from Miss Kat. Regarding the impact on consumptions, sa tingin mo ba ay nagde-decline pa rin yung household consumption of non-essential commodities given na sobrang dami na nagre-renovate ng mga houses, rooms, etc.?
Okay. Salamat. Okay, marami kasi yun eh. Hindi lang yun household equipment and routine household maintenance. Furnishing meron din. So it includes alcoholic beverages and tobacco, clothing and footwear, recreation and culture, restaurants and hotels, and miscellaneous goods and services. At marami pang iba na hindi ko nabanggit. So itong mga ito, yung household consumption of non-essential commodities. So sa tingin ko, magde-decline pa rin yung consumption. Kasi hindi naman basta-basta mahahatak pataas ng mga nagre-renovate ng bahay yung household consumption on non-essential commodities. Kasi may iba pa namang factor doon. Thank you.
I too have a question. So, given the three-phase program, so what do you think are the issues that need and don't need to be prioritized?
What are the issues? One of the issues that do not need to be prioritized is the early campaign in politics. So wala na tayong pakialam dyan. Di dapat natin yan binibigyan pansin. And the issue naman na we should prioritize is yung mapigilan yung patuloy na pagdami ng COVID-19 cases. And yung vaccine use because of the limited supply of vaccines. Yeah.
So, is there any questions po? Okay, so since wala ng questions, let's move to the next moderator, Mr. Abraham.
So, let me introduce you the next speaker. She is a BS Applied Mathematics student. The title of her presentation is influence of online food delivery apps on the operations of the restaurant business. Let us welcome Ms. Katrina Daya.
Good day, everyone. I am Katrina Dayo, and I will be presenting the paper entitled Influence of Online Food Delivery Apps on the Operations of the Restaurant Business by Shanta Sridas and the Bomaya Gose. This paper was published in December 2019. So this would be the outline of my presentation. The advent of technology and smartphones are revolutionizing our standard of living. So with just a few taps and swipes, we can have the luxury of enjoying the food at the comfort of our home while binge watching Netflix. Dining out with family and friends has been replaced by the concept of eating in. So someone having a long, tiring day at work and not having the strength to prepare food or wants to skip home cooked meals can order online with just a single tap of their smartphones. The restaurant sector is one of the fastest growing industries in the Indian economy, and the revenues generated from it are likely to increase more in the coming years with the concept of ready cooked meals. With rapid urban development and the massive number of people coming to the cities in search of jobs or leading a better standard of life, the concept of ready cooked food has gathered much attention. So the various food delivery apps operating in Guwahati, Assam, India are Swiggy, Zomato, and Uber Eats. The objectives of the study are as follows. First, to understand the importance of third-party outsourcing logistics for food delivery. Second, to analyze the impact of online food delivery apps on the inventory management of restaurants. And third, to assess the significant issues faced by the restaurant owners. The research is carried out to understand the impact of online food apps on the operations of the restaurant business. The study is conducted from the restaurant's point of view, how they are managing their inventories with an increase in customer demands, and what are the advantages and disadvantages of tying up with the third-party food logistics. The geographical scope of the study is the Guwahati city of Assam, India. The study will help new restaurateurs to understand how they should manage their inventory in this era of online food delivery and also evaluate the pros and cons to understand what aspects they need to focus on for fulfilling the customer demands. The sample size is small for the accuracy of the online app's influence on the restaurant business. So it is carried out again in Guwahati city of Assam so that the results may vary for the other parts of the country due to the different lifestyles and regional differences. Also for the researcher could also not cover the food delivery apps due to which proper information could not be extracted. However, these limitations provide scope for further research in the future. The present study is exploratory and both quantitative and qualitative methods are used for data collection. The study analyzes the responses collected from the restaurants of Guwahati and it attempts to find out the benefits and problems arising in the process. The data is primary in nature and collected with the help of a structured questionnaire comprising both closed-ended and open-ended questions. For the survey purpose, convenient sampling was used as the sampling method, and the sample size of the study is considered 125. The research tools used in the study are percentage, charts, chi-square tests, and descriptive statistics. For the analysis and findings, the respondents were first asked about the number of food delivery apps they're listed with, whose response is shown in the slide. So the figure shows that the maximum of the respondents, that is 50%, use at least two online food delivery services for their food delivery. 33% of them use 3 apps, 14% use only a single app, and 3% use more than 3 apps for delivering their food. Then the response for the extent of usage of apps for the restaurant's food delivery and their impact on the restaurant business was analyzed. The responses are recorded in the table that is shown in this slide. So maximum respondents, that is 50%, always use third-party apps. 40% of them use quite a lot. 8% use very little, and 2% do not use much. It can also be seen that the usage of apps has impacted their business a lot. 37% have been impacted to a great extent, 46% to quite a bit, 14% have been impacted very little. However, 3% have a negligible impact on their business. This table shows the features that help in the increase in sales of the restaurants. 43% said that promotion helps the most in increasing the sales. 13% said that they help in increasing the customer base. 25% said that they are cost effective to the business, and 19% said that they help in building their brand image. On being asked whether the restaurateurs use any inventory management software, it was found that only 38% use inventory management software, whereas the rest of the 62% does not use any software, and they're still dependent upon the standard manual practices. So some of the inventory management systems used by the vendors are NEV, POS, Hustle, Just Billing, and Ranslab. Almost every one of the respondents, that is 76%, maintains safety stock for the packaged and processed food items in case of emergencies, and only 24% do not maintain any safety stock. Well, this table shows that the significant challenge faced in terms of inventory management is an excess inventory with a mean of 3.19 and a standard deviation of 0.78, followed by failure to keep track of stock, followed by difficulty identifying demand patterns. From the hypothesis testing, it is found that there are stock out and wastage situations in the restaurants due to the online delivery apps. So the table shows that the primary reason for stock out is inaccurate data with a mean of 3.4 and a standard deviation of 0.65, and that wastage is the overproduction of food with a mean of 3.28 and a standard deviation of 0.76. A few recommendations for the restaurateurs to better manage their inventory will be discussed. So first, even though a maximum of the restaurants in Guwahati does not use or may be unaware of the importance of an inventory management system, it is very crucial to deploy a proactive inventory management system, as it can be a crucial investment in a food business. Well, most of the vendors of Guwahati go out of stock mainly due to inaccurate data. Hence, an inventory management system will make everything much more manageable by automating all the processes. As we know, hand counting of inventory can take a longer time, but the restaurants can perform the same process with an inventory management system in a matter of a few minutes. Number two, the restaurateurs need to take their inventory regularly. They should prioritize items and, of course, take their inventory accordingly. Number three, they need to clean out and organize the stock areas before taking inventory and discarding items that have expired, or organize similar items on the same shelf. Taking inventory after the outlet has closed or before it opens is advisable. So one cannot take accurate inventory while goods are getting sold. So a fixed time should be picked to avoid fluctuations in the results. And number four, it is necessary to accurately assess the already existing stock in the outlets before going for a new purchase. Maximum food wastages happen when the stock is ordered in large quantities but not consumed before it gets expired. Well, the restaurants should use the first in, first out, or the FIFO method for inventory usage and ask their staff to arrange the inventory according to their expiry dates, or they're in time at the kitchen and dispense the inventory as per the first in, first out rule. Although the online food ordering system has become extremely popular these days due to its ease and convenience, it also possesses a good number of challenges. First is with an increase in the usage of these apps, some of the aggregators are charging commissions as high as 20 to 25%. As a result, the small businesses are running on very low profit margins, and if this trend continues, they will soon be out of business. Number two, due to the soaring demand for the online orders received through third-party providers, the walk-in customers are slowly facing dissatisfaction due to the delay in receiving food, as these orders have very little turnaround time within which the food is to be prepared and dispatched to their destination. Number three, with a wide range of restaurants providing a variety of options to choose from, it has become challenging for restaurants to retain customers in the long run. So, the customers become loyal to food delivery apps and not restaurants anymore. Number four, the customers often cancel their orders when the food does not get delivered according to their expected time, which causes wastage of food. So the customers call the delivery guy several times to locate their order, ultimately resulting in customer dissatisfaction and decreasing the chance of ordering from that restaurant again. Oh, the restaurant segment and the food delivery market have enormously changed over the last few years with rapid urbanization and an endless influx from neighboring places to cities. Ordering a meal from outside and eating in has become a tradition these days with the increasing number of smartphones and food delivery apps. So this research paper gave an idea about how the usage of online food delivery apps can have a positive impact on the restaurant business. The paper also highlighted the inventory management strategies that the restaurants are following in the day scenario. So for effectively managing the restaurant inventory, a few recommendations were given that might be helpful to the restaurateurs. So the issues faced by the restaurants currently can also be solved in the future, which leaves scope for further research. That would be all. Thank you.
Thank you, Miss Dayaw. So let us entertain some questions. May tanong agad dito. So, to Miss Dayaw from Mr. Markov, what is inventory management? Can you share some of the inventory management techniques? Naka-unmute ka. Ano ka?
Ay, hello, sorry. So the definition and the techniques were not really defined and on the paper, but based from my research, inventory management is the process of tracking the number of products you have on your shelves or in store, or the ones with the ones with the retailers and distributors. So yung techniques first is JIT or just in time. So dito sa just in time, marireceive mo yung goods just before you need to ship or sell them to others. So this one is helpful to small businesses na wala masyadong cash flow or warehouse space or monetary capital compared dun sa mas mga malalaking businesses. So instead of tying up cash in inventory, you can instead invest that money on attracting more sales in the first place. So yun yung first, just in time. Second is consignment inventory. So this one, selling on consignment is when you send the products to other retailers for them to store and sell on your behalf, with of course each business taking an agreed share of the profits. Ito yung feeling ko na parang napapansin naman natin siya sa mga sa mga ibang stores na parang nag-resell sila ng iba't ibang klaseng products. So Parang consignment inventory yung technique doon. So, any business can sell as a consigner or consignee, pero you need to ensure that you're able to accurately track the inventory both financially and physically. So, third technique naman is drop shipping. So, this involves forwarding sales orders and shipments as a request to your vendor or manufacturer. So, sila yung magiging responsible for sending the items to your customers on your behalf. And usually, andun na din yung branding mo as the seller. So, ang alam ng customer is parang sa'yo siya galing. So, unaware yung customer that you use a drop shipping company. But by adopting this research, you'll typically have lower overheads as you're not physically storing products. So, magme-maintain ng dispatch process and you won't likely have to pay for inventory upfront.
We have another question from Angela Bellones. Since your presentation somehow tackles inventory, can you share some inventory management systems you have researched?
And so for the inventory management systems, first is periodic method. So ito yung we have to track the data sa inventory system natin periodically, mga 3 months, 6 months, or it depends. It depends yun. So this one is better for smaller businesses. Yung other method naman is perpetual method where you have to constantly track the items. Then this one is, according to research, better for larger businesses. So other inventory management system is yung barcode system. So mobile scanners and barcodes will help efficiently in finding and moving stock. So yun yung nakikita natin sa mga grocery stores, yung barcode. Then other one is RFID tagging systems, which is more expensive but it can actively scan without input from employees. Dito naman sa RFID, parang ang alam ko pa lang is yung mga nasa tollgate, dun pa lang yung RFID. But other than that, parang hindi ko pa siya nakikita talaga.
Okay, thank you. So that is the 5-minute Q&A. You may now introduce our next presenter.
Thank you, Abe. So for the next speaker, we have Mr. Jonathan Kyle Monzon, a BS Mathematics student specializing in analysis and PDEs, who will be presenting the research entitled Numerical Solutions to Elliptic Problems in Circular Domains.
Thank you. Thank you, Kat, for the introduction. So, as Kat said, I'll be presenting a research paper entitled Numerical Solutions to Elliptic Problems in Circular Domains. This research was done by Mr. Neil R. Romaldes last December 2019. So for my presentation, this is my outline. I'll be presenting first preliminaries, so a short introduction to numerical solutions, plus the abstract and problem statement in his study. And my main part will revolve around his results, which includes the analytical and numerical solution, and comparing those results. So first off, what are numerical methods? Numerical methods are, one use of them is to solve differential equations. And compared to the ones we know in calculus classes, which are the analytical methods, numerical methods are used when the differential equations, more specifically PDEs, become too complex. They become too complex in more realistic scenarios. And we use numerical methods to approximate the solutions to those exact solutions given by our analytical methods. So some examples of numerical methods, the more common ones, are finite element method and the finite difference method, which is used in his study. So finite difference method is used since it is a very straightforward method. Theoretically, it's very easy to understand. From the name itself, it uses finite difference approximations. And this numerical method is a mesh type. So it makes use of a mesh or a grid that looks like this. And each point on the grid is also called a node. And each node you can imagine is an equation. So say this rectangular domain is modeled by a PDE. To approximate that solution, we turn that PDE into this system of algebraic equations, which can be solved through matrix manipulation and through programs and coding programs. So the applications of finite difference method are in line with applications of PDEs. So those include more on applications in physics and engineering. And one example is heat conduction also, which uh, models in different geometries and shapes such as circular shapes and spherical shapes. For his study, he does the finite difference solution to an elliptic problem. The elliptic problem pertains to the characteristic of the PDE. The very figure he shows in this study is a circular wedge with the Dirichlet boundary conditions prescribed. So the study also provides an analytical solution, and he compares those two solutions. Since I said finite difference solution or any other numerical method is an approximation, you want to know if your solution is accurate enough. So you compare it to the uh, exact solution, which is the analytical one. So for his problem statement, he considers a circular wedge domain D, where r is the radius and theta is the angle. So r is from 0 to a and theta is from 0 to alpha, where a is positive and alpha is positive but less than or equal to pi. So that's for his domain. For his equation, he considers the steady state heat conduction problem on the form of a elliptic equation where with two independent variables in the PDE, the radius and the theta. And the solution to this equation itself is the steady state temperature distribution in the circular wedge domain. So to better illustrate, this is his general figure with prescribed Dirichlet boundary conditions. And he uses this general figure to solve for the general analytical and general numerical solution. So for the analytical solution, his main method uses separation of variables. A short definition of separation of variables is given a second order PDE. You reduce that PDE into two ODEs by assuming this solution form. And through his paper, he was able to derive this temperature distribution for his domain. Notice the infinite series here. In his paper, he states that this is the Fourier sine series, and Cn is as follows. So that's for his analytical solution. For his numerical solution, he, as I said, it's a mesh type. Finite difference method is a mesh type numerical solution. So he first, I believe the term is discretization, and he turns his domain into a mesh or a grid. So first he divides the radius interval into equal parts. So his step size will be a over n sub r. And he does the same for the angle. He divides to equal parts and the step size becomes alpha over n sub theta. So in general, the grid points will look as such, where r sub I and theta sub j, where I is from in between 1 to n sub r plus 1, and j is in between 1 and n sub theta plus 1. So he uses this general grid points to solve for his finite difference scheme. So for the finite difference scheme, this is his general solution. Notice that his range changes from the before, since he is solving for the interior grid points. And of course, he will also have to change the Dirichlet boundary conditions prescribed. And This changes because of the range. So given his analytical and finite difference solution, he codes this in Scilab and then compares his both results. He has two sets of data. This is his first set with the following prescribed Dirichlet boundary conditions, and his maximum radius is 5, while his maximum angle is pi. And this is for his second set that we will go back to later. So for his first set of results, as you can see, this is his table of values. Column A refers to his analytical solution values. Column B refers to his numerical solution values, and C is his absolute error. In the graph, the y-axis is the temperature, while the x-axis is the radius. So for the first graph, in the angle of pi over 6, his average absolute error becomes 0.492. And for the angle of pi over 4, his average absolute error is 0.536. One thing you can notice is from the graph, uh, sa may unahan, makikita mo pa yung difference ng lines nila. But when you go further away from the origin, it almost becomes one line. It checks out with his values where the absolute error reduces as he goes farther away from the origin. Same with the angle of pi over 4. So for the next angle, 2 pi over 3, his average absolute error is 0.3. And you can see that it is almost one line, except in the middle part where his error is a bit bigger compared to the rest in the graph. Same behavior with the angle of 3 pi over 4 with an average absolute error of 0.25. So that's for his first set of results. For the second set of results, this is his figure with prescribed Dirichlet boundary conditions and a maximum radius of 3 and a maximum angle of pi over 2. So again, for the angle of pi over 6, his average absolute error is 0.4307. You can see that the difference is more apparent in the middle part as well, also seen in his table of values. Same with with angle pi over 4 with an average absolute error of 0.36. Sa may gitna siya mas nakikita, pero sa may dulo sobrang liit na nung error niya. And for the angle of pi over 3, the average absolute error is 0.25, and same behavior with the previous two graphs. So his summary and conclusions are the finite difference solution gives relatively close values to the analytic solution. I believe his highest average absolute error was 0.5, and so still very less than 1. And kita naman din sa graph na sobrang accurate na siya, na almost isang line na lang. And his values further from the origin yielded solutions closer to the analytic value. There are some exceptions to this behavior, but yes, this is the general behavior to his results. And that's it. Thank you for listening. And these are his references.
Thank you, Kyle, for that presentation. So the floor is now open for questions. You may type them in the comment section or the chat box. While waiting, I have a question for you, Mr. Kyle. First is, what are some ways of increasing the numerical solution that you presented?
I didn't mention in the presentation, but in his solution itself, he uses actually 3-point central difference in his finite difference method. So from my understanding, one way of increasing the accuracy is using more points. So a 5-point central difference could yield closer results. Since in theory, when I showed the nodes, adding more nodes will give more accurate results to the analytical solution.
I thank you. I have another question for you. How can one utilize the results of his numerical solution in a real life scenario?
Uh, he in his study he actually used and considered steady state heat distribution conduction on circular coordinates. So one way to interpret also the graph that I shown previously was as it goes farther away from the origin, the temperature decreases. So that's another way of interpreting it. And of course, since his is numerical solution, uh, in a scenario wherein your PDE becomes too complex or the solution does not exist in some different boundary conditions, the numerical solution could approximate results for that.
Thank you, Mr. Kyle. So, if there are no more questions, you may now introduce our next speaker.
Thank you, Kat. So, for our next speaker, she is currently studying BS Applied Mathematics, specializing in uh, financial mathematics and actuarial sciences. I open the floor to Miss Ashley Casas.
Thank you for that, Kyle. Good morning, everyone. So this morning, I will be presenting my basis paper called Minimizing the Ruin Probability Through Capital Injections. This is a study that's conducted by me, Dixon, and Lee. And this is a paper that was published back in 2011. So here is a quick overview of what I will be discussing today. So we first consider a fixed amount of funds, capital U. So we consider this to a portfolio of risks so that the ultimate ruin probability for a portfolio is known. So we define capital U as U plus Q of UK, where U is the fixed amount of funds, small u is the initial surplus, and Q of UK is the reinsurance premium. So the aim of their study was to investigate whether the insurer can reduce this ultimate ruin probability. There. So the aim of their study was to investigate whether the insurer can reduce this ruin probability by splitting U into two parts. So the reinsurance that was considered in
Miss Ashley, is your screen moving? Wala pong gumagalaw sa screen share.
Sorry. There, is that better?
Yes, thank you.
Sorry. Okay. So as I was saying, the reinsurer that was considered in this study was not traditional. It relates to the amount by which the surplus process falls below a fixed level K. So each time the insurer surplus falls to a level K minus Y such that 0 is less than Y less than K, the reinsurer makes an immediate payment of Y to the insurer, restoring the insurer surplus to K. So if any claims causes the insurer surplus to fall below 0, the reinsurer does not make any more payments, and ruin occurs at the time of this claim. Next, the surplus process is defined as capital U of T equals U plus CT minus the sum of x of I from I equals 1 to n of t, where U is the insurance surplus at time t equals 0, C is the insurer's rate of premium per unit time which is received continuously, n of t is the counting process for the number of claims, and x sub I denotes the amount of the i's claim. Next, let T sub u denote the time of ruin so that T sub u is equal to the infimum value of T such that capital U of T is less than 0. And then the ultimate ruin probability is defined as psi of u equal to the probability that t sub u is less than infinity. So we now introduce a modified process which includes a low barrier k. So the modification to the classical risk process is that each time the surplus drops below k but not below 0, an injection of funds will immediately restore the surplus level back to k, so that the surplus process continues from level k after the payment of the claim. So as you can see here, pag bumabagsak siya ng below K, tumataas ulit siya because of the payment of the reinsurer. It also happens here. But then kapag bumaba na siya below 0, hindi na magbabayad yung reinsurer. So diretso na siya and ma-record na siya as ruin. And next, we define here psi sub k of u, which is the ultimate ruin probability for the modified surplus process. And it is defined under two cases. The first of which is where u is equal to k, and the second is where u is greater than k. So the corresponding formulas for those are seen on the screen. And next, we have here more formulae to now compute for the, which will help us compute for the reinsurance premium. So E of S sub UK is the equation for the expected total claim amount for the reinsurer up to the time of ruin, and it is also defined under the same two cases that was previously mentioned. And the formulas are also seen on the screen. So we now assume that the insurer holds an amount of capital U, of which small u is allocated as the initial surplus and Q of UK is used to buy reinsurance. So given a value of the initial surplus U and therefore a value of the reinsurance premium required, which is Q of UK, we can find the level of the lower barrier K. And what will be of interest in this study is whether there is a combination of UK such that the ruin probability psi sub k of u is minimized. So we let u star and k star denote the optimal choices of u and k respectively. And we note that even in the simplest cases, which is the exponential claim sizes, we are unable to find explicit solutions for u star and k star. Hence, numerical techniques are required. So here we have more formula from Dixon, which we will also use to solve for the reinsurance premium. Suppose that P of x is 1 minus e raised to negative alpha x. So for our numerical solutions, we set alpha equal to 1 so that the mean and variance of the claim size distribution are both 1. Also, we set lambda equal to 1 and c to 1.2. So our first example, we set Q of UK to 1.6 multiplied by E of S of UK. So this is the reinsurance premium that is calculated using the expected value principle with loading factor delta equal to 0.6. So they set capital U to 15, and they find that for this value of capital U, the ruin probability under the original process is equal to 6%. And they find that the optimal choice of U and K is 10.05 and 7.23 respectively, giving a minimum ruin probability under the modified process 0.00226. Here we have the figure that is that illustrates how the ruin probability changes with U given the capital U. So in this figure, this straight line is the ruin probability under the original process, and yung broken lines is the broken line is the ruin probability under the modified process using the lower barrier K. So as you can see here, using any value of U and K, we can see that meron na siyang agad na reduction compared to the ruin probability under the original process. And next for our second example, Q of UK is equal to E of S sub UK plus 2 standard deviation of S sub UK. So this reinsurance premium is calculated using the standard deviation principle with loading factor delta equal to 2. And the given initial capital is 20, which gives us the ruin probability under the original process of 2%. So they note that any combination of UK provides a lower ruin probability than under the original process. Though only certain combinations of U and K reduce the ruin probability compared with the original process. And they find that the optimal values of U and K are 12.50 and 4.25, giving a minimum ruin probability of 0.01645. So here is the figure that illustrates example number 2. So we can see that, again, this is the ruin probability under the original process, and the broken line is the ruin probability for the ruin probability under the modified process using the low barrier K. So as you can see, there are only certain values of U and K that will reduce the ruin probability as compared to the ruin probability under the original process. So table 1 shows the optimal values U star and K star, as well as the corresponding ruin probabilities under the scenarios described in the previous examples. So this one is the ruin probability, reinsurance premium rather, that is computed using the expected value principle. And this part of the table is the reinsurance premium that is computed using the standard deviation principle. And this table also shows the percentage reductions in the ruin probability so that we can properly illustrate the effectiveness of the low barrier system. So here we consider capital U is equal to 11, and we see that the ruin probability under the original process is equal to 13%. We see that when we apply yung nahanap na optimal values of U and K, we find that there is a 61% reduction for the new ruin probability as compared to the ruin probability under the original process. And when the reinsurance premium is calculated using the same value of U, we find that the reinsurance premium, though it's not showed here, but in the paper, they were able to find that the reinsurance premium exceeds the initial capital 11. So they didn't need to compute. They didn't need to pay for reinsurance. So we can see that as capital U increases, the insurer is able to buy reinsurance under the scenario of the second example. And we see that the ruin probability can be reduced considerably with an appropriate amount of U and appropriate choice rather of U and K. So as you can also see, the percentage reduction rapidly increases as the value of capital U increases. So from the previous results, we see that the value of K can be quite high compared to the initial surplus small u. And this situation may not be acceptable to reinsurers. So So as we can see here, if U is equal to 17, yung K natin ay 9.19. So there's not much difference between them. So parang hindi siya situation that's favorable to the reinsurer kasi malulugi sila if the retention level is that high. Kasi that will mean more reinsurance, mas marami siyang injections rather na mabibigay. So we solve that issue by setting K to reasonably low levels. So ang first na gagawin is that we set the ruin probability under the original process equal to these values, and then we solve for the corresponding values of capital U. And using these values of K, we solve for the ruin probability, which is given here in this column and this column. And we can find that when U is equal to 16.88, the ruin probability before insurance is 0.05. But once we use these values of U and K, we see that there's a great reduction from 5% to 3%.
Ms. Casas, kindly conclude your presentation. I'm afraid the time is.
Okay, sorry. So to conclude, the insurer can considerably reduce its ruin probability if it can allocate part of its capital to the surplus process and the rest as a reinsurance premium. However, the optimal barrier level may be sufficiently high to make a reinsurance contract unattractive to a reinsurer. Though the insurer can still create a meaningful reduction in its ruin probability by setting a relatively low value for the barrier. And this is my reference. That's it for my presentation. Thank you for listening.
Thank you, Ms. Ashley Casas. The floor is now open for Q&A portion, good for 5 minutes. Kindly chat your question in the Zoom or YouTube. While waiting, I'm not really familiar with this field of study, but I believe you mentioned that this is using a non-traditional type of reinsurance. So, can you compare that to traditional type of reinsurances?
So, I cannot say yes for certain if this is really a better option than traditional reinsurance. I do not have sufficient knowledge on the traditional type, but from what I do know, there are a few advantages to using this type of reinsurance. So having the retention level would give the insurer an early start in making a decision kapag kasi bababa na siya sa retention level, that's already an early sign na you can head into ruin. So that gives them, so having the capital injections would give them more time to think of what they could do to prevent ruin from happening. And aside from that, I did not include this in my presentation, but the authors have found a way actually to release a fund without it affecting the ruin probability. So yung funds na yun magagamit siya ng insurer for other purposes aside from buying reinsurance. So those are the advantages of using this type of reinsurance.
So a follow-up to that question, how did you utilize the research now to your own research?
Compared to this study, yung SP ko, I will be using an additional control variable, which is the asset allocation. So, aside from that, yan lang yung magbabago. Though, and my study has adapted yung reinsurance process na to and yung way of computing for the reinsurance premium.
Okay, so we have one question from the Zoom chat by Luigi Salian. What do you think is the trade-off in pricing the premium? How do you keep premiums attractive?
I think this is I think kahit na kunwari may medyo pricey yung premium, I think a way to keep this attractive is by setting a good value for U and K. Like, dapat meron siyang healthy balance between the both so that um, it's not gonna be necessarily hindi naman pwede kasing sobrang favorable to you yung U and K. So dapat meron siyang healthy combination para ma-feel nung insurer na talagang nag-favor sa kanila yung yung agreement nila ng reinsurer.
Okay, are there any more questions? We don't seem to have in YouTube, and I believe that's all. So thank you, Ms. Casas. I now move the floor to you to introduce our next speaker.
So thank you for that, Kyle. For our next speaker, we have Miss Patricia Elaine Ebreo, who is also a BS Applied Mathematics student, and she will be presenting her paper called she will be presenting a paper called Valuation, Optimal Asset Allocation, and Retirement Incentives of Pension Plans. So, Miss Patricia Elaine, I leave the floor to you.
Thank you, Miss Ashley. So, good morning to everyone again. The title of my thesis paper is Valuation, Optimal Asset Allocation, and Retirement Incentives of Pension Plans by Sir Sundarasan and Fernando Zapatero. So there are three main ideas presented in the study. First, this research created the framework on the valuation and asset allocation policies of several defined benefit plans based on the lifetime marginal productivity of an employee and the pension plan formula. Second, the authors provided an optimal asset allocation policy, which consists of the replicating portfolio of the pension liabilities and the growth optimum portfolio, independent of the pension liabilities. Lastly, the authors also provided insights on the ratio of pension benefits to the current wages of the employee, where it reaches a critical or peak value depending on the parameters of the pension plan and its discount rate. So there are actually 5 sections in this study. However, I will only be focusing on these following sections. So the first section, which contains or describes the model and introduces some assumptions which were used in the analysis in the succeeding sections. Second, the fourth section, where the valuation formula was used to identify the asset allocation policies that ensures the pension obligations were met. In addition, this section also describes how asset allocation policies or decisions on both mandatory and voluntary retirement differ from each other. Finally, the fifth section, which summarizes the whole study and in which contains the conclusion. So we now proceed to the first section or the model. So the employee is characterized by his or her age at time t, denoted by A of t equal to A sub 0 plus t. So A sub 0 is the age of the employee where he or she entered the firm, plus t or the number of service years of the employee. The marginal product is f of A of m, where m is a stochastic process defined by this SDE, where m sub 0 is equal to 1. In addition to that, the function f of A of t is a function of the age 80 of the employee. It is assumed that the employee works for the firm until his or her retirement. It is also assumed that the function f of a of t is an increasing function in of age of the employee up to a threshold a star, and then begins to decline and gradually levels off. Furthermore, in exchange for the contribution of the worker or the employee to the production in the firm, he or she receives compensation from two sources. That is x sub small t, or the salary paid to the employee as he or she continues to work for the company, and p sub capital T, or the pension benefits that accumulate over life but are ultimately paid at retirement, capital P. So combining all components mentioned and taking into account the assumptions, the wage process would be defined by this. The first term describes the accumulated salary of the employee, uh, where X of S is his or her current wage times the compounding factor. The second term would describe the accumulated pension benefits based on the salary of the employee, and the total accumulated salary plus the deferred wages, or the deferred salary of the employee, is said to be equal to the marginal productivity of the employee described by this term on the right hand side. So we now proceed to the fourth section, or the feedback effects of voluntary retirement. So in order to get significant data on the asset allocation policies, the key component would be to identify the volatility of the pension plan. So in order to do this, the authors performed Monte Carlo simulations. Sorry. Two cases are treated for each path of the Brownian motion for the value of the pension plan. That is mandatory retirement and voluntary retirement. The difference is that in the case of voluntary retirement, capital T, the retirement date would be stochastic. So presented on the screen is one path of the Brownian motion for both cases, mandatory and voluntary retirement, using these following parameters. Uh, The feedback effect of retirement decisions leads to the following qualitative changes in the valuation of defined benefit plans and in the asset allocation policies. So this table provides a basis to analyze the effects of the design of the pension plan on both the value and the optimal portfolio that corresponds to it. So, summarizing the following results, it was discovered that the plan under voluntary retirement requires, in general, a smaller investment in the risky security. When the worker optimally chooses her retirement date, the value of the pension plan tends to be less responsive to the shocks in the economy. And therefore, the market strategies to offset the risk of the fund's optimal investment would be smaller. So finally, we come to the fifth section, or the conclusion. So I have summarized the points mentioned by the author. First, the study had provided a unified framework for valuing pension obligations and finding asset allocation policies, which dependent on the lifetime marginal productivity schedule and the type of defined benefit plan that the sponsoring firms have. Next, it was recognized that the nature of the defined benefit plan influenced the employee's retirement decision, as observed in the results previously. Finally, taking advantage of the valuation of pension obligations, the authors have explicitly characterized the resulting optimal retirement policy to offer their employees. So that's actually all. this is my reference. Thank you po.
Thank you for that presentation, Ms. Elaine. So we are now open for questions. You may send them in our Zoom chat box, or to those who are watching on YouTube, you may send them on the live chat. So while we're waiting, I wanted to ask, since in your reference, I have noticed that your reference is parang matagal na siya, 1997 pa. So, do you think that this research can still be applied to today's situation?
Okay, thank you for that question, Ashley. So, yung una ko munang i-specify is yung marginal productivity model that was used in the study. Basically, yung marginal productivity model na binanggit doon sa study is where the employees marginal productivity tends to increase sa initial years ng pagtatrabaho niya. Tapos, dahil sa some circumstances na hindi natin alam, dadating siya sa peak productivity niya at some point. Tapos, gradually, bababa siya ng bababa hanggang sa umabot na siya sa retirement age. So, sa tingin ko, though 1997 pa nga yung reference ko, though, ayun, yung ganitong type ng employees sa economy ay nag-exist pa din. Parang yung kunyari yung sweldo nila umakyat pa rin na umakyat, pero at some point yung productivity nila ay hindi na equal sa sweldo nila. So ayun yung isang aspect na masasabi ko na current pa din. And yung sumunod na aspect ay yung overall model na ginamit sa study. So, ang maganda dito sa model na to is open siya or may space siya for parameter changes, which means depende sa kung anong state ng economy ngayon, pwede mong palitan yung parameters na gagamitin mo. Kunyari, the inflation rate is at this rate right now, pwede mo siyang palitan dun sa model mismo. So, makaka-adjust siya sa current economic status ng pinag-aaralan mo. So, ayun yung sagot. Thank you.
Thank you for that. Ms. Kat Dayo is asking, alin yung mga concepts na ma-apply sa special problem mo?
Actually, yung pinaka-significant na concept na kinuha ko sa study na to is the marginal productivity model. Though kinuha ko rin yung concept na yung equation kanina, pero hindi ko explicitly ginamit kasi yung definition doon ng equation is accumulated wage plus yung pension benefits ay equal daw sa marginal productivity. Sa study ko, mas magpo-focus ako sa employer imbes na sa kasi doon parang kino-compute yung total productivity base sa perspective ng employee. Dito sa akin, mas concern ko is malaman yung age using this model, at yung model na yun is accumulated salary plus yung pension contribution ni employer. So parang mati-take into account doon yung parang inaambag ni employer doon sa productivity ni employee. So parang i-check natin kung dadating, parang using this model, malalaman natin kung equal pa ba yung inaambag ng employee sa parang inaambag ng employer. So ayun yung pinaka ginamit kong concept sa study na to. So ayun.
Are there any more questions from our audience? There's also no more questions from YouTube, so I think that's it. So thank you, Ms. Patricia Elaine Abreu, for that presentation. And so this marks the end of our basis paper presentation. Thank you to everyone who watched, and good morning. Thank you. Thank you for watching.